market's biggest lesson here will be at this right shoulder that I talked about. Now I will come to this, right? Because we got this quite straightforward here. This was at 12:06, right here, right near to the top, and that's when we already identified the pink. You can always wait for the pink, right, to form here of that 670, as I talked about as well, right? So absolutely no surprise. You prepared for this, right? To the point that you can avoid the chop. Well, you can catch the top too. I will talk a little bit about that. But one of the main learning points here is the lack of the, left shoulder liquidity, as I was talking about here. Now, if you were to review the intraday analysis here, I talked about how there isn't left shoulder liquidity here, and the market has to build it, and this is why you see the magenta, right, going into overdrive hard mode, building plenty of the nested structure here, right? So for the first nested structure, you see this, and subsequently you see this. Now all penny perfect with the magenta. Now the final one started selling in that orange and in that blue. Now, how do you catch this trade here? Now, if you want to catch this trade, this gets a little more difficult, but only when we identified the pink rhythm that becomes easier, right? So you see, we identified the pink here, and you see how it retraced off that pink. So we identified the pink, I think, about around 11, slightly earlier. Then 11, you saw the pink building liquidity. Or as I mentioned, the multiple nested head and showed a pattern breaking out in the orange. You see the orange was consistent even before we retested the pink. And so once you saw the pink put to work, this retracement candle right here, now this becomes very important, because as I was also talking about that 670 yellow, this was an important level, right? You see orange in control, you see the pink building liquidity. Yeah, you had that retest there, that was quite important. We had the retest here as well, quite important, and this turned into some sort of resistance after that breakout and retracement. So this became quite important for an entry here if you were looking out for that, especially when magenta was trying to build more liquidity. Now, as I mentioned, if there were liquidity here, this will not be necessary, because you see the chop here, it's just absolutely choppy, but it's penny perfect with the magenta, and subsequently with the, you see penny perfect and magenta, isn't it? So if you're looking for any longs, this just certainly is still within the control of the magenta here. So you can always wait for the retracement. Now, this move, if you waited, so much better than this blue one, isn't it? And I want to talk a little bit about this blue one, because you see at that point in time, it was just this magenta, right? Like that. And you see how we had the magenta that grabbed the liquidity from here, breakout, retrace back to the magenta. And this was when the blue rhythm what's this? This was the original blue rhythm. And you saw the wick that was forming. Now, wicks are a form of strength, especially in the 1 minute chart. When you see a wick like that form, it means that the selling pressure is high, it's fast. That's why it's a wick that started forming. Short span of time where there's selling pressure. And this selling happens at a very key area And so apart from the wick, you need to know where the wick is formed, and that's important. And in this case, it's off the, well, firstly, it's the magenta. It's a rejection of the magenta as a resistance, because you see the price closing below the magenta. And you see the second red candle here, right, forming another wick. So 2 wicks here. And you notice that the 2 wicks have very close proximity to the blue algorithm that we already identified. And so this is why I mentioned you have to reposition or readjust your blue algorithm, because it's actually the same blue algorithm but affected by the wicks, because there is, well, stronger, I would believe it's stronger volume, and I would think it is. Let's take a look. Yep, it's a stronger volume. So there is more price rejection of that level, but it's the same algorithm in control. And so you could still have caught a very beautiful, 1 point trade here. I think it's more than that. It's 1.5 point trade, and to a very key level that I was mentioning here with that yellow 670 to the penny right here. Now, this is, as I mentioned, right, we talked about this, a lack of left shoulder liquidity, and that's why the market needed to build more liquidity here. And this was also quite an important point, 1040 if I'm not mistaken. It's about the yellow algorithm in a 30-minute chart. So having a 30-minute chart open, it's really important as well, right? So you pay close attention to that. Now you need to see continuation structure here, right? And very importantly, if you miss this trade down, so be it. You cannot chase it. The only time you chase it is when the market starts to build more liquidity again, like that. Now this is when you chase it, right? So understanding that it may have to form a head for this for this head and shoulder pattern, you would want to take a zombie trade here, right? Once again, bears wants this to go up to build liquidity, and bulls obviously want this to go up. So this is known as a zone of mutual interest. This can be quite simple, but I will always scale down for trades like that, right? So firstly, we're selling off at the blue, and then you notice that we are having slightly less strength in selling, and once we started retesting in that magenta, and you see the strength in that orange again. Now usually if I chart diligently here, I would have taken some calls on the breakout here, ready for the breakout here. But if you miss this, it's absolutely fine, because you wouldn't just have missed this. And if you'd taken the zombie here, you would have to be protected by here because of the pink algorithm that was previously controlling this. Because if you're expecting the head and shoulder pattern, this is what you expect, isn't it? So even if you took calls here, you have to protect it by here. But otherwise, you see that the strength here in that orange breaking into the upper band. So this is the lower band orange, and we broken up above to the upper band with a stronger buying continuation structure. And you remember this pink algorithm here, isn't it? This particular pink algorithm where I talked about that engulfing candle. And you see the bounce here, which I talked about as well. Where's the bounce? Right, so we prepared for this as well. This is, well, nothing surprising, isn't it? Just take a look. It's nothing surprising. Right, so we talked about that. We were prepared for that. And more importantly, I talked about the bounce. Where was it? Let's see. Yeah, bounce of the pink here. Right, at 11:36. Exactly at this candle. Let's take a look. This candle was exactly at 11:36 right here. Right. So this candle at 11:36, I talked about the bounce of the pink. Now this pink was important because it was resistance and it turned support, isn't it? A beautiful trade. You had orange all the way up here. Now this was when I told you to be more careful, because we have not retested the high, and this is where sellers are. We're not even retesting the pool of sellers that are at the high. So always remember, there are always very key levels here of the highs in this case. We have not even retested that, so I would not even consider going long. I talked about that here, right here. Right, I prefer a proper close with teal. Right, we have not retested the highs. And so you have to understand the highs are where mostly, right, the sellers are, because you see the selling that commenced from this range. So there will always be, well, some leftover sellers here, and we have not even retested it. So unless there is a breakout here from a strong algorithm and triggering the stops from the sellers and causing more to buy, yeah, then maybe breakout retrace, I will consider it then. But the retest of that high is always very important if you want to be looking out for more upside here. So at this point, you see teal starting to build more liquidity. Now, if you caught a zombie here, this would still be very arduous, but it's a good zombie because, as I've always mentioned in the first 2 episodes of the training videos, this is trending down. So if you're taking puts, this is trending down. It's always good for you. You're always, well, in a way, in the green, unless you are way out of the money for trading options. But if you're trading futures, you're always going to be green because this is trending down. So for a zombie trade, this is excellent. But otherwise, if you see, in this case, how do you short this? Right, the first instance of shorting this will be if we do break on that magenta, and you notice that the selling pressure, right, is still in that orange here. So you would have a precision algorithm, you would have a break of that orange here, but I would wait for that initial pink here. This one is quite important. This particular pink, you saw that happening in that orange here of that 670. So this will be a very important range. But otherwise, you notice, this is important because I talked about how this is where you have to prepare for your macro structure and prepare before you come to the trading floor, right? Because I talked about how the Qs have closed its inverse cup right here. When did I talk about that? Let's see. Yeah, 11:16, right? Qs have closed its inverse cup. Exactly 11:16 here. So once the Qs have closed its inverse cup, you expect that there is a support there, and that's where you have to bounce. And you can imagine this entire sequence here is the Qs trying to build that inverse handle after closing the inverse cup. And this is why, if it's not closed its own cup yet, this is technically, yes, an inverse handle from the inverse cup. You understand that, right? So let's just fire up the Qs. Let's just take a look at that. So don't mind me just firing up the Qs here. Right, see Qs closing the inverse cup and the handle right there. Beautiful. Right, so you understand the logic behind that. Let's go back to SPY. And so when you have the, pink algorithm right here that's building liquidity, right, you have the magenta, and this is just a very classic dual algorithm setup that I always talk about, right, building liquidity here, right, we lacked that liquidity, there's no downside here, it needed that. Well, if you call this a stop hunt or a nested right shoulder. And more importantly, you see the stronger blue algorithm just taking control on the breakout. Once again, I talked about this 670, and you see it happening again right here. Very, very crucial. Let me just zoom this out so that you see it more clearly. Right, I talked about this right at 670 retest. Like exactly as it happens, right? The only modification from here is understanding that we had to rebuild more liquidity from this, right? And the liquidity was the retest from that 670 at that level. So it's absolutely beautiful, a beautiful trade here. Now let's take a look at some of the questions from today, right? Right, answered this 9:55. Taking a zombie trade here, it's not that easy, right? Here, it's not that easy. The only reason I would take a zombie trade here would be firstly understanding that the magenta was in control, right? We saw the magenta in control, right? So there's an early tapering right here, and there was a lack of, well, inverse head and shoulder pattern here from the teal, right? If, big if, say at this point in time, right, the market formed like that, right? Please ignore all these other candles here. But if the market forms something like that, I will certainly not go short, because this is a clear structure of the bulls trying to build liquidity to head up, right? But however, you see here the teal, you see the teal here, but we do not form the inverse head, and we lack that strength here, isn't it? And you see teal starting to rebuild more liquidity again. So in my mind, I'm thinking probably like that, if the bulls want to go up. And obviously the bears wants to go down, right? This is quite clear for that magenta. So is this a good zombie trade? Maybe. But without this early blue indication, right? We do not have much selling at the top. The only time I identify this blue is here. So yeah, very, very scant details. But I could still take a trade here, small position maybe, right? Keep your questions shorter if you can, because it takes me some time to read it through here. I'm sorry if I don't answer everything. There's some things I'm sure I have already explained during my first half of the explanation. It's very hard to truly, if you're trading 0 day to expiry, the objective of the market is to just liquefy you, right? So that's why they want to do that. And as I mentioned, we're trying to catch 1 point, half a point. Sometimes if you have something like that, which is a 5-point trade, it's an absolute bonus. So you cannot have any bias. Biases will destroy you. Now, days like that, it's fine, right? Because it's just one direction, almost. But even this one direction trade, you may get drawdown from here if you're just shorting this right from the start, or even here. So you see how dangerous it is to have some form of bias. What you need to be looking out for is segmentate your trades like that. And this is one trade here, this is one trade, this is one trade, one trade, one trade. When you segment your trades like that, right, you do not have a bias. You can have a bias within the segment, but after which you must refresh your mind, look at the context, and try again. So please do not have a bias if you can help it. The blue algorithm adjustment, I talked about that, right? Well, I talked about this as well, right? Yeah, so cups closing, right? Remember the cues. I fire up the cues and reminded you, and that's so important, right? Well, I don't particularly use hotkeys, but you can consider using hotkeys. Well, 1 second chart is very distracting. Too much noise. If you're a newer trader, try to avoid smaller time frames. Some of you can't even handle a 1 minute chart, right? So try to avoid 1 second charts if you can. What I used to do is to, and this is something that you cannot see on a static candle chart, but when market is live like this, yeah, it's currently live now. Let's take a look. You see, the candles are moving, right? And they are in a way, well, moving with some strength. And this is in, well, obviously I also use in conjunction, right? It's a book map here, right? So that's on the side. You have to understand that I also look at, well, some time and sales data as well. So it's important you understand where the orders are. There is a concentration of orders. You can have confirmation on the candles. But regardless of how I identify the algorithms, which, once again, public announcement here, how Chacha is always recording, how I record them, right here every day. You see, it's getting longer. It used to be first 10 minutes, but they've been doing it for the hour together with my analysis here. So excellent resource here, right? Shout out again. Thank you very much. Thank you for doing all these every day. Now, you will notice that sometimes it doesn't matter in identifying the algorithms early. Even when I do so, right, it's just a guess. I still need confirmation, and you realize the confirmation can come later. So one very good example, this is pink algorithm, right? You can, well, identify the pink algorithm much later here, right? Once you have this, and after which you realize that it can still be very, very useful, right? Or the teal, you identify the teal much later, maybe over here. You notice that the teal is quite obvious once you charted it a little later, isn't it? And you realize it can still be very, very handy. So just trade what you can see. Now, don't force yourself to see things that you cannot see it yet. You will eventually see it. But very importantly, try to avoid smaller time frames if you cannot handle it. And that's one big reason why I'm using the 30-minute chart to guide you. Because some of you will see this much more clearly and translate it into the 1-minute chart. Trust me, your second chart, 15 seconds, 5-second chart, or some of you even going to tick charts, well, they can be very distracting. A lot of noise. And, well, frankly, you are going to doubt yourself even more. And the thing about trading is you have to eradicate as much doubt as you can in your trades. And this is why we keep it simple. If you have too many indicators, you're going to doubt yourself in every trade, stop yourself out in every trade. It's not going to stack your skills. You're not going to improve because of that. So always remember, keep it simple, right? And this is why I think, having the 30-minute chart is very important, because you see, right, we're still, right, this move here from the yellow that I talked about. It's a brilliant move, isn't it? You have that retest here. And once you broke out of that yellow, you're still in that green selling. And so you have to translate this. And if you're protected with runners right here, right, let your remaining runners just run down the green in the 30-minute chart, because you can afford to do so. So quite straightforward, isn't it? And, well, it's a beautiful lesson today. Right from the start here, remember some key lessons here. Segmentate your trades, right? Understanding how to be finding more confirmation in the cues, because a big part of SPY right now is technology stocks from the cues. So you have to understand that sometimes you have two similar charts, but you can have correlated structures that will give you more confirmation. So a big one will be the Qs closing the inverse cup here, isn't it? Even though SPY overshorted by a little bit, and overshooting is fine, because overshooting just means that you're soaking up more sellers at a lower price. It's never a problem. You notice that my cups, it's never a problem if it's overshort. But if you're short from retesting the cup, that's always a problem, right? So, yeah, I hope this helps. Yeah. Now, one big lesson on Tuesday. that you need to learn is this. I talked about this 10 a.m. I mentioned that shorts covering is incredibly easy in grind downs. And you see that happening here because you see all the greens are extremely aggressive. How do you know this is a grind down? Because if you, allow the day to just materialize itself, you notice it's just selling. Well, initially it was selling in just the teal, which I was extremely cautious. And subsequently it started selling only in the pink right here. So, technically it's a good day because you still have almost a 10-point range, intraday range here, both up and downs. And it's extremely important, therefore, you see how important it is to have penny perfect algorithms to capitalize on, your ranges here. Just take a look, especially nearing to midday here. You notice not penny perfect, the liquidity wedges, right? So that's important. You have to identify your algorithms quite clearly here. Use them to your advantage, especially if you missed the early drop here. The point is, don't fret over it, because if you identified your algorithms properly later, you still will be able to catch very good trades. So one good example will be this particular trade here once we identify the magenta. Right, so this was at about 950. This was 950, about thereabouts. By 950, we already identified the magenta, isn't it? The magenta was identified around 949, about there. Right, so right before, you see how magenta started forming here, and we see glimpses of the blue algorithm starting to sell here. So if you were scoping this, this magenta play will be a good candidate for your early scopes. And let me just show you how I have done it. Now, firstly, you are retesting a particular low here, right? So there is some very important levels here that you have to consider. Now, firstly, this is a very important level, right? Because this was where we had that green candle bounce. This was the low of day, and this was also when we identified the magenta algorithm that started forming here together with the orange. You see the blue that started selling, which we also already identified. Now, we identified the blue much earlier. Blue was identified at 945, right? Much earlier than that. And so you see there is some breakout and retracement right here. You would have still caught a very beautiful 1.3 to protect it. And by then we also have identified this pink, and you see how it has turned. Just take a look how beautiful that pink is. Turned into some sort of resistance here to guide the way down. Now, the early candle scopes are not for everybody. But if you manage to be able to see this quite quickly, this would have been quite a beautiful trade to take right here. With, all the algorithms already identified prior to this. But as I said, if you are not able to identify them early, you can depend on the algorithms that I draw. That's all right. But otherwise, we want to depend on yourself, which that's not a bad idea. You don't have to rush it because the magenta revealed itself much later anyway. Right, by then, by 10:20, you would have already identified a magenta, isn't it? So the point is quite simple, right? We work together as a team. You can use my inputs to help in your trade. Absolutely possible. And why not? If you want to learn to be better, right, you can always use what I input for you first. This is a viable trade, yes it is. But if you're a newer trader, I would have advised you to wait for the second trade that will come, and I'll show you that. Right, so the second trade here is when you see that teal is selling quite a grind down, because you see you can have 2-3 points bounce here. As I mentioned, shorts covering can be very aggressive in the grind down. This is technically a grind down here, even though it's a large range grind down, if you will. So you have to be careful to short this, right? Because if you, well, do not have magenta, you realize people who shorted without magenta, they are always in trouble. They are always getting stopped here. This trade here, this becomes quite easy, right? Told you to wait for some sort of dual algorithms here. And this comes as no surprise. Yeah, I talked about this a little later in the day. Right, 1019, much earlier. Right, example. Trying to find a dual algorithm setup, and this is nothing new to you. Right, 1019 was early. This was 1019. We already can learn to see some sort of dual algorithm setup here. So take a look here, and the dual algorithm setup right here. Take a look for yourself. So when you understand this, you are able to, well, prepare for a trade here. Now, this is what I wanted to talk about. Now, the difficulty is in preparing for this trade. You don't always have to take this, right? Because there are several ways you prepare for this trade. Let me run through them here. Generally speaking, it's easy to identify this, but taking a trade is another thing altogether, right? Because you notice, right, we had a breakout here, and it started bouncing back up, and we rejected that. I mentioned if it's not selling in the blue, I mentioned this. Let's take a look. When did I mention this? If it's not selling in the blue, you don't want it. Yeah, so if the breakout of magenta is not in blue, you don't want it. Right, you have to remember we are, well, technically in a grind down, especially if you're taking puts at supports. Right, it's always a bad idea, always, if you do not have the precision algorithm. Now, you have to be very disciplined in this, because there are times where it will sell without the precision, and the precision will take over only much later. But it doesn't mean that you are wrong, right? Exceptions are not the norm. You have to follow your principles, because if you're just gambling and risking taking puts at supports all the time, you are just going to get yourself burned. Well, let's run through this. Now, firstly, you see the dual algorithm setup here, right? Now, this is an engulfing candle here. So yeah, if you wanted to take a short here, fine. I would have. Well, you have to then know that what is selling. In this case, teal is selling. You use teal as your guide here. Now, when this red candle happened, you have to protect it, especially when you're taking breakouts here. Now, you notice I always, because I'm using a 1 minute chart here, if you have the opportunity to protect it within that candle, that is visibly the most obvious cue for you to take profits or protect your trade. It's the most obvious cue, and it's the most immediate feedback that you can receive from the chart. So once the red candle appears on the breakout, you have to protect it, and this red candle is no slop. That's a 0.7 point candle. Well, it's more than enough. It may look small here, but this is 0.7 points. It's great profit. Trust me on that, right? So you have to already take profits on this on the breakout, because you have no certainty. As I mentioned, that blue is in control. Blue is in control here, but we were blocked by the magenta building more liquidity. And if, just if we see stronger blue that's selling here and we have a breakout and retrace, this would have been a much better trade, and you would see that a little later. But this happened if you're in, and I would have been in here because of the teal. I would have used teal, and this red candle appeared, I would have absolutely protected it and Well, if it mounts back up, so be it. Because you notice that we have therefore formed a secondary magenta. It has built more liquidity here for the breakdown here. Blue appeared. So this becomes a better trade for you to take all the way down. Now this particular trade is no slop either. 658, 655. This is a 3-point trade here. This is 3 points here. That's an amazing trade if you wanted to take the trade. If you're protected here, you may want to add once we reach the magenta. I wouldn't have added here. I would have waited for the secondary break here and taken another short here. Now, knowing that it's teal, right, you would have based your stops on teal, and this red candle will be an extreme bonus. This is a 1.4 point trade, 1.4 point candle. Right, so if you based your stops on teal, you would have been pampered by this red candle, protected it, right? And if there's no continuation, especially from blue here, I would have cut all my positions. Well, at least 70% of my position. And you see breakout here, you get stopped. That's fine. You still made very good money from this particular trade. And that's the point that I want to try to bring. I mentioned if it doesn't sell strongly in the blue, well, the bears are not truly in control. They are selling at a higher price, but they're not willing to sell beyond this price here. You notice that, right? At this certain price range, they are not selling. Now, if you want to use demand and supply using the zones, this is too big a range, right? There are people who are using zones for demand and supply. Now, I used to do that because, well, it's documented in the Discord server. The only reason I used that was because they were great keywords on YouTube. 4 years ago, that's the only reason I started using key terms like that. But you know I am not a proponent of that because just take a look at the drawdown, right? This is a 3-point range. So you're trying to tell me to endure a 3-point range. And this is why we derived the algorithms, because you notice that they are absolutely penny perfect. You can you don't have to endure even a half-point range or even 0.1 point, sometimes even to the penny, literally. But that's not realistic. We know that. So you just have to base it off. To me, it's about 0.3 to 0.5. That's as good as it gets. And you see it doesn't start selling in the blue. So you have to just be careful. And it's absolutely all right to miss the short, even though you see a beautiful structure forming. But apart from this blue algorithm here, there is no downside here because technically speaking, we are grinding down. And you have already seen glimpses of shorts covering here, very aggressive. And this is no surprise because the bulls have built an escape plan here with this liquidity on the right shoulder, which you see it beautifully grabbed very quickly on the way up. So if you don't see the downside, and this is very important information, because if you are trying to force a trade on the downside, you would have missed this better trade, isn't it? So the point is simple. Do not force trades because it will allow you to have the bandwidth to prepare for the next better trade. So let me give you a thought example, a thought experiment. If this truly is heading down, you will see more glimpses of, well, firstly, knowing that this could be the trajectory here, right? I talked about this. I talked about this, about the R&R here, right? If possible trajectory here for the teal. If this is the possible trajectory, you should be expecting stronger blue, retracement of blue, and, well, maybe in this case, you would see maybe like that. Let me just redraw it here. So you can see a good example of this heading down. So you see magenta building liquidity, right? So it's about playing out the scenario that you're prepared for, so you know you are always in a good place in your trade, right? So you see the rebound here. Now, if this built liquidity and the market grabbed it like that, yes, see, even if you missed this blue here and you saw this magenta building liquidity here, there is liquidity that's building before it starts having some selling pressure on the way down. Would you have shorted here instead? But it didn't happen, isn't it? You see that this zone here, that is ideal for the bears to push it further down. We didn't even reach here. Instead, we broke out of the teal. So you don't have to partake into this. You can always prepare for a stronger way down. And this is when you know that this trade has better RR, even if you miss this part, even if you miss this particular trade here. Let me just realign that again. Yeah, there you go. Even if you miss this early break from the blue algorithm here. But otherwise, you are preparing for this, because you see the bounce up here, and this could have been a beautiful trade. The market even gave you 5-6 minutes to prepare for this, right? But if this is great, because you see how the bounce off. Remember, as I always mentioned, right? The magenta turned into support. Right? This is a beautiful support. So it didn't even become resistance. You don't see, well, it is a resistance of this large red candle. So this resistance turned back into support. So the bulls want to cover at this price here. So there is this particular algorithm that the institution is using for the day that's buying off in that magenta algorithm. Now that's what you have to take away from here. And you see it started buying in the stronger blue. See, this is the cover, right? So you notice that there is a algorithm that's covering shorts with this blue algorithm. You see it happening here. So all you got to do, wait for that in terms of the breakout. So you're using blue to guide you initially over here, and it started expanding here, right? You would have caught a very nice uptrend here, right? So understanding this very important concept on Tuesday regarding shorts covering, well, it's crucial. Right now, next we see how right, the market started building. Now this is a mini cup here, right? Not truly the full cup that started closing. This is a full cup closing. I will address that later, because you notice that the market started selling here. Not always conclusive. This could be a very, very important trap. I will talk about it for tomorrow's brief. Not in today's video. Today's video, let's talk about the intraday action. Now you notice here, we wanted to close the cup here, right? That's the mini cup. We had a breakout here. That's great, right? So this is a good sign. By then, now I was away already at this time, but there is another algorithm here that you could have charted, and that would have been a beautiful trade here as well. So I will use this blue as an example, but if you don't have this, that's fine too, because well, we have bounced off, and you see the blue algorithm back in action here. So you would have caught this trade here. Now, I mentioned you have to wait for some liquidity to build in this magenta before it heads down, right? So I talked about it here. You have to set alerts at the magenta. You have to see some structure in the magenta band here before it heads down. Now, for one good reason, because we lacked liquidity here on the way down. And the reason is because these are shorts covering. They are not the bears building liquidity to try to push down. So you can imagine that there is this institution that's trying to cover the shorts at this price. Now, when you understand that better, you will know that it is not truly a bearish action. It's just that people are just offloading, selling at this price range. And this is why you see there's so much selling at this price. So understanding that, and this is why I mentioned you have to wait for some sort of a structure here before it starts heading down, because it just lacks the liquidity. The liquidity is here. That's great. So you have to wait to see that short is starting to form before it breaks further down to grab more liquidity down. Now, when you understand this, and this is a lesson from yesterday, so watch Monday's video, where I talked about the lack of liquidity on the left shoulder and how the market will try to build it on the right in order for you to see a stronger action. Quite straightforward here, isn't it? But otherwise, you notice, and as I shown you here, and well, if you do not have the magenta, just imagine you don't have the magenta. You're a trader that's not in a group, you don't have the magenta, and you're just shorting this. Well, you will be caught with your pants down. Absolutely you will be, because you think this is selling. You don't have the magenta that's penny perfect. Just take a look how penny perfect it is. You will be caught in big surprise because you don't know there is a hidden support level that's around here. So if you caught this short, one way to catch this short here is knowing there's a zombie trade, right? Now, even though we're chopping here, technically speaking, you can treat this as a zombie. So if you caught a zombie trade here because you know that it has to build a handle, especially in a, well, technically bearish day here, you see how the controlled selling has happened. You could have caught a zombie and enjoyed it all the way to the supports. You know exactly when to protect it. So it's still a viable trade here, but otherwise, catching this is pretty good off that support here, because once we lacked that selling, and remember, as I mentioned about shorts covering, there is this particular statement that I made here at the start of the day about shorts covering. Let me find it very quickly. Yeah, now 10 o'clock here in the morning. The way to catch an upside bounce is to wait for strong selling, okay, but without clear structure and selling continuation as a stop hunt. Now, this is important because this is covering shorts. I was trying to explain what it means by covering shorts. Now, you notice in shorts covering, there are several factors. The first factor is there's a lack of structure, right? So you don't see clear structure. You see very strong selling appear out of nowhere, and the structure broke down. You notice from blue, right, it turned into teal, and it's no longer in control, and we started to bounce out. So possible zombie trades will be taking at the break of the precision algorithms here. You don't always get it. It's not always realistic. For example, this is not realistic. I wouldn't have caught this because the candles would have been too quick, but the teal would have been realistic, right? So catching this would have been possible because you already see that it's not blue in control. It's starting to taper in teal, and you had the magenta to guide your stops. So this could have been possible. You could have possibly caught this zombie trade here, right? The secondary one will be here, right? Blue and teal, right? You still have caught this as a bounce. So you see, these are techniques you can deploy if you're desperate for trades. You just want to catch quick scalps. So as I mentioned, you have profits that you can find in the chart set every time. Sometimes I recommend a safer play, fair enough. But there are times you can use these techniques to just get your half a point, 1 point. You can find profits in the charts all the time. Likewise here again, right? So if we're selling in the blue, let me just chart this properly so I don't get it wrong. Right here. If we're starting to sell in blue, right, it's not materializing. And you see the teal right here, right? So you see, if it's not selling in blue, right, you see very strong buying. This was when you already see the blue buying algorithm already showing itself, right? So absolutely, I would have tried to catch this zombie here if I were trading this. If I were desperate for a trade, don't have a safe structure, I would have definitely tried to catch this zombie, knowing that the magenta is starting to build and you have a very strong position to guide your trade here. Right, so understanding this, that's important. So I'm just trying to explain what I've tried to comment about. Right, so quite straightforward here. Now, you have to learn to identify precision algorithms here, because once you identify precision algorithms, these are not big candles. These are just candles within your precision algorithms. So I want you to train yourself not to be looking at individual candles, right? Because some of you will think that this is a big candle. It's not. It's just part of the pink selling, And when you see it that way, you will be more tuned to not be too jittery around individual candles, right? And you learn to see the bigger picture. You will learn to not force trades without structure, because some of you are forcing trades over individual candles. And can you imagine forcing trades here, or even here? Now you will just get chopped. It's not ideal, especially if you're trading large contracts. You will get into trouble eventually one day. So lots of lessons from day to day. The market is kind. Thank you very much for watching. Wednesday, and the biggest lesson for Wednesday, well, will be not to chase when there's no structure. Right, so this was a very classic example right here. In the morning, we were just buying in the strongest precision algorithm that we could have identified early in the morning. But it was, well, consolidated in that blue buying. So let's just use this blue buying as a representative here. Now, it's important because if you read my commentary in the morning, I kept mentioning not to chase it, right? So if you, well, it's important you run parallel with my analysis here in the morning, comparably with this video. And I kept mentioning to you not to chase, because if there is structure, you will see it. Now, it's a little uncomfortable because this went 7 points up. Now, certainly you could have caught some trades here for sure if you want to take a particular trade here. I want to talk about that in a bit. So there is a possibility for more advanced scoping. And remember, you're trading your risks. So if you are able to identify certain risk parameters here, in this case, if you know it's buying the blue, you want to attempt to take a call off the support of the blue, certainly I would think that's a good trade. But only if you're an advanced trader and you obviously don't go full port in a setup like that, right? So volume was quite consistent, right? If you were using 5-minute charts, for example, you see that the volume was readily quite consistent. Otherwise, you would have seen volume decreasing much more drastically, right? So maybe like that, shaved it half. So you would have so much less volume here, for example. But this is pretty consistent throughout the entire morning on the way up. So this is a clue that you could catch, but much easier clue only on hindsight. On the live trading floor, there's just too many factors. So my suggestion for you is to just walk away. Don't take a trade, because firstly, if it's going up, it's good for your portfolio, as I always mentioned. It's never a bad thing. And in this case, once we reach 5-day moving average, this is the opening act right here. What I usually do will be I'll just sell some calls on my portfolio after an initial run up for the day, right? So that's the benefits of selling or writing daily options once that the 0 day to expiry is available. Now, I don't have to worry because you have an existing portfolio. You're just selling, well, covered calls here. So that's another strategy for another day, right? But otherwise, if you want to be catching a trade here, I gave a tip. Yeah, I just want you to see, because you noticed that we were, orange had some confirmation right here. This few candles here, we had confirmation of orange. And we also initially had that blue that was like that, right? And I expanded the blue out slightly over here like that, right? And you noticed that we started to break out of that orange, right? Some of you were waiting for that head and shoulder pattern. You have to be very careful, because if it's not rejecting the orange yet, you cannot call it too early. And I mentioned this. I mentioned if it's still in the blue, you do not short this as much as you can. So you see how dangerous this can be, especially when we have charted the teal. This became quite useful only a little later, right? Because the teal started selling only a little later, right? Yeah, we'll talk about that too. So once you see the breakout of that orange, it was resistance and it turned into support of a very major level at 664. Well, I was looking at a chart and I was thinking this would be where I would have gone long. If I were trading more aggressively, this would be where I would have chosen to go long and protected it within the next few candles, or even protected it within that singular candle here, which was about a 0.3 point candle, probably giving me 10 to 20% returns already with that little candle there. Once you protected this, then you can let it guide yourself to the blue, and you have caught it all the way to the top right there. But otherwise, it's absolutely fine to avoid trading this, because you see how much more profit you can be making later. So this is another example, as you are a newer trader, that you don't always have to try to catch the trade or so hastily want to catch the trade. And it's also partly of what I am explaining in the first video on Monday on learning to segment your trades, right? You create segments of your trades and you break it down into different segments. So the second trade here, which it's a remarkably classic trade. When I mentioned how this is the dream setup, now you've seen me do this more than once, right? This is not a rare occurrence. It happens whenever there's some sort of tapering, right? So this isn't something new to you. How do you manage this, right? Firstly, you understand that there are two very major algorithms here, right? So the orange and the magenta. Now, just take a look at this. This is absolutely beautiful. 1024, right? I've already talked about this. 1024 is here, right? Talked about how this is a dream setup, and indeed it has, because it started converging on the three. There you go, three algorithms right there, giving us that beautiful way down. Now, how do you manage this trade? Now, firstly, you have to understand a certain structure here. Magenta is tapering here, right? You see that we have weakened from the orange to the magenta, and this is a dual algorithm setup. One way to help you understand this is if you can chart this additional magenta here. Now, this additional magenta will help you in your stop loss, because we have also a zombie trade here with the teal. Now, there are two outcomes here, right? Firstly, you either wait for this to happen. So if this breaks the teal, you could stop a trade. So that's the first outcome. The second outcome will be if it retests the 5-day moving average again, closing the cup. So if it crosses the 5-day moving average, you can stop your trade. So you have two stop targets here, right? It's important to have stop targets. You have two stop targets here, and you have your magenta that's building liquidity. And I would, well, in this case, you can't crowd your chart of too many lines. Now, you think this is too many lines, it's not. I could, well, mentally visualize a magenta here. You see the two top wicks here rejecting off that magenta, and this would, well, show you, and you have to be used to this pattern, right? This is a dual algorithm setup from orange to magenta, trying to sell it down. Now, once it broke this orange here, now this is what I really wanted to see. There is another pink here, which is quite crucial, because this pink would be where the stops will be triggered. And you notice it's only when we broke the pink into some sort of resistance that the largest selling in that green precision algorithm started forming. Right, now, by this particle, I would have entered within the magenta here, right? Because I would have very tight stops with the teal. I would have probably entered here and protected my trade on this particular candle here, right? You're protected, you're fine, right? You don't even have to worry about this pink. The problem with this is that trading is not always a fixed pattern. You can have the candles bouncing back up to teal before heading down, right? So you want to protect it as much as possible so you can endure your stop loss right there. Sometimes, right? Another possibility will be the market may build liquidity to retest the 5-day moving average before grabbing the magenta again on the way down. This is also a viable pattern. So there is no fixed pattern, but yet the algorithms do reflect a certain, price pressure to signify an initial direction that it wants to take. So you have in your mind, you must be prepared for all these different scenarios now. So this is why protecting early, you can endure moves like that if it wants to retest the 5-day to grab more and to, stop hunt before it starts pushing down. This can absolutely happen. So you either protect, get stopped, and when you see it happening again, the head and shoulder pattern, you're ready to re-enter. So the point is not to endure your stops. You must have some fixed stops parameters and be willing to stop your trade, but also be willing to re-enter your trade. And it's not possible to re-enter if you do not have some setups in mind of how this may pan out. So you see, if you have 5-day as a stop target, for example, this went up to 5-day, I would have stopped my trade. And when it went back down here, I would have maybe reopened a put. And if it didn't go down, head back up to 5-day, I would have stopped it again. That's fine, right? You have something that you can scale, something that you have a tight stop. So that's quite important to understand. Now, it helps that this is going down in green. So this was a remarkable trade, right? Probably one of the more classic trades that you see us take all the time, right? Plenty of stop loss targets here. So by no means a difficult one. This is probably a simple trade here. So learn to take this, even though they're choppy candles here. You have to learn. If this is too choppy for you, there are two things you have to do. First is to catch the trade nearer to your stop loss. So you have to catch it nearer to the resistances, in this case, if you're taking puts. Or secondly, you have to protect within the candle. As much as you don't like it, there are times where once you enter, you protect it as soon as you can on the first candle. And when you do that, firstly, you're scaled down, because if you took 10 contracts and you protected 5 as soon as you can, right, you are left with 5, and that's significantly, your stop loss is significantly lower than 10. And secondly, you have already some profits to pad your existing smaller position, so you can last much longer. And in that case, you have to learn to nurture your runners even more. It's absolutely possible to be making 200 to 300%, 2 to 3 times profits. So even if you cut this to half, you still be doubling your money. So you have to learn to protect the trades early. Try to get in the move, especially if you're trading 0 day to expiry. Now, the power of 0 day to expiry is that within small moves like that, you can double your account right there. Small moves like that, literally like that, you can have a 100x return. I'm sorry, 100% or 2x returns, right? Or even less. I think this is enough, right? So you have to learn to protect it aggressively. Try to stay as much as possible to be positive, and that will help you in your trades. Will be when this magenta, and you see the same pattern again, but this time a little tricky. Now, I want to address this particular move here with the pink, right? So I talked about this pink here, and you have to be very careful. Let's talk about that. This one, right? You probably see it starting to build here, right? So now, right here. Now, if you saw this, right, you have to understand that this is slightly too early, right? So that's the first indicator. I would be very careful. This is slightly too early. Now, if it's early, as I always mentioned, what do you wait for? You wait for cups to close or retrace and break out and retrace here. So that's one. And another thing is you have to understand who's truly in control. Now, we have not even broken teal. So teal is still very much in control here, right? So you see, teal is penny perfect. So you have to be extremely careful. And why would you catch this? You would try to catch this because you were trying to, I would assume blue is in control here. Let me just chart it out very quickly. Yep. Now you would have tried to catch this. How? Let's break it down. If you're taking calls at supports here, you're in deep, taking calls at resistances here, you're in deep trouble. The only reason you take calls here is if, right, it broke out and you probably see that singular candle, you use this blue as your stop loss target, right? So you entered here, you use this blue as your stop loss target. You would have, well, how many points here? Realistically, 663. This is half a point, right? You have half a point to protect your trade before teal. So you could still have gotten out of this wrong trade, right, with quotation marks, a wrong trade, but we'll still have come up with profits. Before this large red candle came in, you get stopped. So you have to understand that there are two concepts here, right? The first one will be you don't go long here. You don't, because you don't take calls at support. Now, if you took a call here on that break of that initial teal, yes, I would think this is a good trade using orange as your stop loss target. You would have caught this trade. Pretty good trade here. 1.5 to 2 points right there. So this is a better entry than trying to catch it here, thinking it broke the pink, when it's actually the teal. So don't be anticipating breakouts of an algorithm. You need to be basing it off. And this I covered in the first few episodes of the training videos. You have to be looking out for the precision algorithm and using it to guide your breakout. So otherwise, what's a better setup here will be to wait for cups to close, because the liquidity is a little bit early for that pink, right? And wait for it to retrace like that. You will see that particular example later on, right? So you noticed it's still teal in control, right? It's not pink, it's teal in control. So there is another structure here with that closing, and you see there's multiple structure that's forming. So if you went long here, right, and you got married to your position, you didn't get stopped, you will not see this magenta that's building liquidity, which is absolutely beautiful. Can you see that? The magenta is just building liquidity, penny, penny, penny perfect right here. And you would see a dual algorithm setup that's forming here. Do you see the same dual algorithm setup here? Now, I don't even need to have this magenta, because this will be your stop loss target together with the teal. So you have plenty of stop loss targets here to catch this move down. Now, likewise, if you were trying to hold and hope and not protect, you would have gotten engulfed. This is trading. Not all the time do you get beautiful moves, continuation structure. There are times where they just grab the liquidity as quick as possible, and this is not a bad thing. If it's quick, you get profits quickly. What's so bad about that? So there's no good or bad in trading. Everything is neutral information. You just need to take advantage of as much of every possibility. That's it. Because this got engulfed quite quickly. So once you get engulfed quite quickly, you know for sure that this is very protected range, because it starts challenging the teal. Now, how do you trade this then? Now, on the larger front here, you see the picture is much clearer, because yes, pink is still penny perfect. So you see, you avoid trading chops. If this happens, you avoid trading it. Now, I would absolutely not have traded this. No way. No, I'm not trading this. If I could help it, I would not trade this. Maybe I would take some puts at the resistances here, or maybe some calls here. Maybe I would have caught 1 or 2 candles, a few $1,000s there. That's fine. But you know that it's building liquidity. I would have completely not have traded this. And if you didn't trade this and this happened right here, you would know to catch this, right? So it's about being patient, now waiting for a setup to form, just charting the algorithms and taking something you're comfortable with. Because if you were waiting and you happen to pop by and see this, then you would have made sense of the structure here. And you see it's grabbing the liquidity cleanly from that 660 ping, right? It's not too early. It's not too late. It's just grabbing the liquidity right. And this liquidity will make sense of grabbing this from the pink. So you see, it's not too early, it's not too late. Now, this is also a cup close here, right? Even notice this is also a cup close and a handle that started forming on the breakout near to this level here. So how do you catch trades like that? You do not overtrade, right? I saw the engulfing here. I probably think there's some bullish sentiments that may be forming, but still under control from the magenta, right? So even if you shorted this, you could still be right here, right? So if you shorted this from the magenta like that, you still could be right. But if you were married to your positions, you got trapped in the chop, you'll be in trouble because you will not be able to see this pattern, especially when it broke out from that pink. So a big part of trading, truly, if you're a newer trader, a big part of this is to just stand back and truly select the best trade that you can see instead of trading at every occurrence. And when you do that, you either get married into a position, and as a result, you, well, miss the actual trade, and you are forced to add on to a losing trade or just leave your trade open because you are out of liquidity. You know what I'm talking about. I've seen some of your trades there. Or in that case, you become biased with your analysis and you start to develop confirmation bias for your particular trade. And even if you're right, say you manage to get back to break even, you don't choose to take profits because you are married to your position and you think that you're right. You're looking for confirmation biases. And instead of seeing that teal is no longer in control, that pink is actually tapering here, and we have closed the cup here to form that right shoulder, instead of seeing that you think magenta is still selling, and you're in deep trouble. You see what I mean? For sure, that could be another stronger bullish algorithm here. And yeah, I think there is one here, right? But this is not valid for the day, right? This will be useful maybe next couple of days or even next week. But otherwise, you see how you may develop confirmation biases and ruin your trade. And as I mentioned, if the trade is over within this segment, you get out of there, you get stopped, whatever it is. Especially if you're trading 0 day to expiry, you cannot be banking on the market bailing you out. If it's out of that segment, out of that structure where you have planned, you get out of that trade. So in this case, if you're shorting this, right, and it's out of teal, you get out of the trade, right? And you start to reevaluate how you can be taking a better trade. In this case, maybe you get bailed out here. Then because you have created a new trade, it's a new parameters, it's more realistic for the market to give you a 20 to 30% profit than you hoping, if you had a bad position and it has deteriorated 90%, then for you to hope that this becomes a 300% profit to get to break even. You notice the psychological battles you have to fight. Already difficult against a market in the 0 day to expiry setting, you're making it even more difficult for yourself. So you have to segmentate your trades very importantly for 0 day to expiry. Right, so beautiful day, lots of things to learn from here. So please do run through the analysis for the day. See for yourself how the teal and the pink so beautifully built structure right here, right? And many times I've told you to just set alerts and go away, because when you go away and you come back, you see better positions, you see better trades, and if there isn't anything that tickles your fancy, just go away, go back away, and just wait, because the market gives you opportunities every day. And as I said, one opportunity is enough to give you more than enough profits to change your life. Don't get too greedy, right? So thank you very much. Thank you.